I am 25 years old, about to graduate business school with $37K in student loans at 7%. I have invested $66K in the market. Is it worth me pulling money out of the market and paying off my loans entirely? I just got a job.
Here's what I'd like to know. One, it's very difficult to give specific financial advice not knowing your specifics, right? But I've kind of got some leanings and some inklings here. And what I would like to know is, if I were to look at that $66,000, what type of accounts is it in? You're 25 years old, about to graduate business school. So I'm gonna guess you're probably working at some like points in time along the curve. I'm hoping some of that $66,000 is in Roth IRAs. I'm hoping you were loading up those Roth IRAs while you had that earned income coming in. And so if that's the question, should I cash out my Roth IRAs and go pay off this high interest student loan debt? I don't think I'm gonna vote for that. Or maybe this 66 is something that it was a gift from family earlier in life, and they gifted you some stock from the publicly traded company in the town that you leave, and it's highly appreciated. And so if you were to now sell that, you're going to incur a significant capital gain on that because it's gone up in value. Would I go cash that out and liquidate that and pay off that high interest debt? Maybe not. Here's what I would like for you to do. You're 25 years old, about to graduate from grad school and start your first job. At 25 years old, with student loans at 7%, we would argue that that is high interest debt. Brian, do you have the thing that you can hold up? Can you hold the thing? We have a 9-step tried and true process of what to do with your next dollar. And in step 3, we call that high interest debt. And so even though you've gotten a little out of order in terms of you built up some wealth before that, I do think as you begin your career, as you get your first job, as you begin to move along on your financial trajectory, I don't think there's anything wrong with attacking and knocking out that student loan debt super early on in the journey. But I don't know that you have to take assets that are currently invested and working for you, axe those assets, and then squash that debt. Agree, disagree, want to fight?
I think I disagree with you a little bit because here's where I am.
Okay.
This is $37,000 of debt at 7%, which that's pretty high on the interest rate. He's got $66,000. Now, what I don't know, look, I will agree with you. If this is Roth money, that one would give me heartburn to pull out. But if this is after-tax money, meaning that it's got some tax basis, first question is how much of this is a taxable gain? Mm-hmm. But if assuming that and realize you might be you're a student currently, you might qualify for 0% capital gains in that first year.
Okay.
It depends on when you start your career, what your income. But look into the 0% capital gains rate and then compare that to what your new income, your partial year income is going to be after you graduate, and see if there might be an opportunity to get this money tax free. And then here's the second thing. You got a third, because that's the one component. The next component is kind of like a quarterback throwing the ball. You don't throw where the receiver is currently. You throw where the receiver is going to be when they intersect, because the player, once you start working, you're running just like that receiver is. So I don't discount how much you could actually save over the next 6 to 12 months. Because if you are just being a financial mutant asking this question at 25, you might realize, oh man, this is because I've been in school a little bit extra, I've got a unique skill set, and I've landed this great job. I think I'm going to be able to save $1,000 a month, as part of, and use this as your backbone. We know you already have step 1, as long as a portion of that account, that $66,000, hopefully some of this is cash equivalent to cover your highest deductible. Of course, with your brand new job, once you start, you're going to make sure you get your employer match. So you get that 50 to 100% rate of return. Mm-hmm. But then when you get here, I would look at, okay, if I got $37,000 I want to extinguish, I think over the next 9 months, I can save up, $8,000 of this. I'm going to take $29,000 of my 66, assuming I can get this for not paying a gazillion dollars in taxes that's going to undermine it. And then I'm going to, over the next 6 to 9 months, going to pay off the other remaining $9,000. And that way you finish your first year out with this extinguished. Now, that's just, I can't give you, that's just a scenario, because personal finance is very personal. I don't know your tax rates. I don't know all the other components of your income and so forth. But that's just a kind of doing a share if I was kind of looking at this from a situation that gives you the best of all worlds. What do you think?
Okay, I think we could. You know what? I think it's okay for us to disagree a little bit because I don't think either one of those is wrong. I think that either. What I do, like you said, I think you should have a finite timeline on which you should satisfy the student loan debt. Because what I'm seeing is if you are graduating from grad school, you're going to be let's assume a higher income, higher starting salary when you come out. If you can get that student loan debt knocked out in the first year, 24 months or so.
It's high interest debt though.
I know
7% is high.
I know, but you know what makes it even more? You know what makes that interest cost even more costly is if you got to go incur taxes in order to be able to satisfy that.
Hopefully, he's in a low. I mean, the income even if he's in a higher income, it's going to be a partial year. He's going to be 15%. Hopefully, he lives in a no tax state.
I'm not trying to convince you to come onto my side.
I'm trying to convince you.
I think this is where personal finance is very personal, and it comes down to your unique circumstance and your unique goals. I think that either one of those solutions is acceptable.